Okay, so let's go ahead and prepare a multiple step income statement, and then we'll move on down and do a classified balance sheet with this information. What I have here is basically a trial balance for the skate shack. First step that we need to do with any financial statement is always our header, so make sure you go ahead and do your header. So we've got the skate shack, the name of the statement, which is the income statement for year ended January 31st, 2012. And then think about what goes on your income statement. Well, we know revenues minus expenses gives us net income, but now we have this multiple step income statement. We're still going to start with revenues though. So let's go ahead and figure out what is our revenue. Now it looks like net sales revenue here is $36,000. So I'm just going to go ahead and move that on down. So net sales revenue is $36,000. Then we need to subtract our cost of goods sold, which is $19,000. So revenues minus cost of goods sold gives us something. Gross profit, that's right. So we're going to go ahead and move this on down. So now we have the beginning of our multiple step income statement. Revenues of 36 minus cost of goods sold of 19 gives us gross profit of $17,000. Now we're going to go ahead and subtract our selling and administrative expenses. We've got total operating expenses here of $6,500. So those aren't broken down in this particular example, but if they were, you would go ahead and allocate those out appropriately. So minus our operating expense is going to give us our overall operating income of $10,500. So gross profit minus those operating expenses gives us operating income of $10,500. But in this particular example, we have an other expense, which is interest. Often that isn't considered part of our operating expenses. That will be in a separate line item afterwards, along with our taxes. And that will give us net income now of $10,400. All right, let's take a look at what the classified balance sheet might look like. Okay, same exact information that we just used with our income statement. And again, don't forget, need to start with that header. In this case, we've got company name, balance sheet, and this is as of a specific date. So as of this date, these are my assets, my liabilities, and my equity accounts. All right, so the next step here is going to be figuring out what assets do we have out of all of these. And cash is an asset. We also have inventory, that's another asset. Prepaid rent and accounts receivable. I don't see any more. So cash, inventory, prepaid, rent, and accounts receivable. Oh, and equipment. I have to add that in there as well. So we now need to separate those into current and long-term assets. Well, the only long-term asset I see up there is going to be our equipment. And then as far as current assets are concerned, which of those is the most liquid? Because those are usually listed first. So obviously we're going to start with cash here. So we're going to list out our cash and then our current assets. And our assets, and our first current asset is going to be cash. Then typically you'll see accounts receivable that follows, $3,500. Then we had two other current assets, inventory and prepaid rent. And then we'll go ahead and add those up. That'll tell us what our total current assets are for the period, or for the date. And then the long-term asset, we had just one, which happened to be equipment for $5,500. So my total assets now equal $13,700. And don't forget that whatever that particular number is, we need to make sure that my liabilities plus my equity now equals $13,700. Okay, so now let's go ahead and do those liabilities. What liabilities do we see in here? Well, I see accrued liabilities. I see accounts payable, long-term notes, and salaries payable. All right, so we'll break those into current and long-term. And let's go ahead and list that out then. We've got our liabilities, current liabilities, and we had three. Accounts payable, $5,200. Salaries payables, $1,400. And accrued liabilities of $2,300. So our total current liabilities now are $8,900. And then we had that one long-term note payable for $1,800. We'll go ahead and list that out as well. Then we need our equity. So what equity accounts do we have here? That would typically classified or broken into common stock and retained earnings. And we just have one line item here that happens to say total stockholders equity. So let's go ahead and we'll list that out then in the equity section. Total stockholders equity is $3,000. And then we get our total liabilities and stockholders equity of $13,700. And yay, we must have done something right because my assets do equal my liabilities plus equity. And again, don't forget, sometimes this is also broken into common stock and then retained earnings.